So if you get to the point where you can get excited about solving the, I don't even really want to say the puzzle, but it is kind of like a puzzle, but solving the puzzle for the current set of conditions, then that will lead you to being better at solving them and better potentially at learning how to trade based on what you think and what you know the market is likely going to do. Now, if we go down to a 1-minute chart, the market on a 1-minute chart, when it's in a trend, is going to be relatively simple. Would you agree that this is just, every bar is just 1 minute here, and the trend is relatively simple here? It's, or the movement is relatively simple. It's not really that complicated. Even though there are ups and downs and spikes, it's really not that difficult to see and maybe understand to some degree. But as I said before, if you're only looking at the 1-minute chart, then you are highly unlikely, no matter what your understanding is, to really understand what's likely going to happen. The 1-minute chart doesn't contain the whole picture of the market. The 1-minute chart contains a picture of the smallest force, or one of the smallest forces, in a room of larger forces. So one of the means by which you can understand what the market is all about and what it's doing is to begin to understand that the one picture doesn't represent the whole picture. Now, if I were to flip this around and put a yearly chart up, I can tell you that the yearly chart is such a large time frame that whatever is larger than the yearly, say a 2-year chart, right, if there's such a thing, or a 3 or a 5-year chart, if I were to look at the 1-year chart, yes, there are larger time frames. There always is, because the market can be viewed. Hell, the market could be viewed as a single candle. I could take the beginning of the market, the date of the actual market began, and where it just went to as its all-time high, and where it's trading right now. And that would look something, gosh, it would really be, I can't even get it in there to show you, but it would, let's just say it would look like this, just for giggles here. Let me straighten that out. Hold on here. There we go. This could be the entire market. This could be the last 100 years, right? In a single bar. So you could have a 100-year chart, or whatever, all the time that the market has been trading. You could turn that into a single price bar. So you can view the market from all kinds of different time frames, but in order to do a successful forecast for what the market's going to do, you will have to view the market at more than just that particular time frame. So it's just as silly to try to say what the market's going to do in today's 3rd hour as it is from a yearly chart, as it would be to say from a 1-minute chart what the market's going to do in today's 3rd hour. So you're going to have to do something more. And by the way, our forecast for this 3rd hour is that the market was going to move down. This is the, let me actually take off the Globex from here so you can see this a little clearer. The 3rd hour today, normal posture for the market would be that it would be down at 40 to 39 area. And this is the 3rd hour. The 3rd hour got down to 42, but they did it actually 1 unit late. And they got down to 36, 44, 36, and then they reversed right back up. And we're in a trade on the upside in the room for this move back up. So in order to understand that that was likely going to happen, I certainly wouldn't get that information off of a 1-minute chart, nor would I get it off of any particular chart. And here's where I'm going with all this. I would get it off of at least 3 charts. That's where I would get that information from. Now, why would I get the information off of 3 charts? Couldn't I get it off of 1 and be sure? Sometimes you could get it off of 1 and be sure, but the world that you and I live in has 3 dimensions. And so when you're trying to solve for construction, or you're trying to solve for measuring something, or you're buying a new refrigerator, you're always doing it with the three knowledge: length, width, and depth, right? Is that not correct? And so you're not going to try to buy and install a refrigerator without knowing those three factors in your house, or a dishwasher, or a washing machine. And I could go on and on and on. You use the three principle in everything, because you're doing it in your driving every day, right? Your mind is doing all kinds of math and calculations as you're driving. You may not be conscious of it. The mental part of our mind, that when I throw a ball to you and you catch the ball, you've done an enormous number of calculations in your mind, but you're not privy to those calculations. It would overwhelm your consciousness to see all the numbers flinging by and all the calculations being done. And our minds are designed in such a way so that the calculating part is actually not conscious. There are people who have accidents where their brains are injured, and as their brain tries to recuperate from that injury, for one reason or another, the conscious portion of their brain grows connections into the part of the brain that does these mathematical calculations. So there are people who actually are conscious of their mind doing calculations in the same way that we are not conscious of it. They are conscious of it. And they report back that they see visually, because remember, the unconscious mathematical portion of their mind has been connected by a wire, if you will, to their conscious, or by a number of wires to their conscious mind. And many of them report, when they look at people and see things, they see geometrical diagrams around people, because the mind is doing that and calculating time, space, and distance. That's what we're all doing, but they're actually conscious of it. So the principle that I'm giving you, or just suggesting to you, is that you will need to understand that, in order to solve the market, because what does that even mean? What does it mean to solve the market? Well, one thing it means is you're going to have three factors involved in order to fully solve what the condition of the market now, and therefore what its condition will be at a certain point in the future. So you need three to do that. There's many times, now having said that, there's many times that I can make very adequate forecasts with just two of those three factors. But I'm telling you that in the same way that you and I live in a three-dimensional world, the market also is in a three-dimensional world. And those three dimensions have to be addressed if you're going to forecast at a much higher level. It's one thing to say, well, the market's going to go up or down. And it's another thing to be right. But it's another thing entirely to say it's going to go up to this exact price and it's going to reach it at this exact point in time in the future, or something like that. To get to that level, you will have to understand the market from various viewpoints that take in all three dimensions. And you might say, well, boy, that's just too much to take in. It might be for some people. But I think anybody could do it and could learn it. If you're very eating your next meal depended on it, you would definitely learn it. And that's how I would teach it. I would basically tell you, you're not eating until you can do this, whatever it is, or understand this, and you'd make darn sure you understood it, then you'd get a meal. So it can be done by anybody if they have sufficient interest. I've often said that this is like playing three-dimensional chess, because it is kind of three-dimensional chess. One of the interesting things is that as you get a little further along, you'll see that each dimension has a relationship to the other. Just like the room that I'm in right now, I'm in a relatively rectangular room. And I've given you this before, but I'm going to say it again. If I had a metal bar through my head, going from the left side of the room all the way through my head laterally to the right side of the room, and I could slide along that bar from left to right. And I had another bar through my forehead going from the front of the room through my head to the back. Every time I move, I'm subtracting from one dimension and adding to another. So if I move backwards, I am actually increasing the distance between me and the wall in front of me. And simultaneously, the relationship is I'm shrinking the distance between me and the wall behind me. And if I move from left or to the left, then I'm increasing the space on the right side of me to the wall, and I'm decreasing the space. My point is that they're connected. Those dimensions are all connected up. And you begin to see that you need to take all of that into account to understand what the market's likely going to do. Now, they're starting to move the market now pretty good. We're down at 54, and I probably will have to run here in a little bit because I want to get back in there. And I do want to thank you for your patience when we're not here, because the markets have been really huge. We have a big task at putting all this together and so on.